Welcome back. Time now for the word on Wall Street. Top investors watching your money. Joining me now is Dominari Securities CEO Kyle Wool. Also with us is Mike Lee with us this morning. Kyle, thank you so much for joining the conversation. We so appreciate it. Futures this morning just took a major leg down because of a warning coming out right now from IBM. This is affecting the stock as well as the broader market because IBM is warning on earnings for the second quarter. They're supposed to report earnings after the close on July 22nd, but we're getting this warning this morning from IBM, and the stock is down sharply right now, down about 16 or 17%. That is what took the Dow Jones Industrial Average plummeting just now, and now the Dow is down 467. Your thoughts on what we're hearing on IBM about spending on AI, Kyle?
Yeah, I think there's a lot of spending on AI, and that's one of the issues, too, when you look at the three different indices. Like the Dow Jones Industrial Average is a price-weighted index compared to, like, the NASDAQ or the S&P, which you don't see down very much, and the NASDAQ's up. But IBM is definitely a big drag on the Dow 30 right now. I think they're probably spending a lot of money. They're trying to catch up with the other players. You've got major players in the industry like Meta, Google, et cetera, that are out there, and they're spending a lot of money. I think when we look at the technology company spendings, you're going to see big CapEx spendings across the board in these names, looking for future revenues. And then on the flip side, you're looking at these banks, Maria, and you're seeing a tale of two cities, right? You're seeing the major commercial banks like Bank of America and Wells Fargo. They're doing great because interest rates are going up and they're making money on deposits. I think that's another big story this morning. And then you're seeing the investment banks like Morgan Stanley, Goldman Sachs be coming out in a little bit. And I would not be surprised if they had huge revenues due to the SpaceX IPO and the trading with all the volatility in the market. So I think we got a mixed bag this morning, Maria.
Yeah, it's a good analysis because the banks obviously have gotten good reports, and the stocks are mostly higher on the heels of another look into their business, which was a strong quarter for the second quarter. Capital markets business, obviously, very strong. But all three major indices were lower yesterday after President Trump announced that he's reinstating the blockade in the Strait of Hormuz, vowing a 20% fee across the waterway. The escalation coming after a series of strikes between the U.S. and Iran over the last several days. And the commander-in-chief announced more action against Tehran is coming. That sent oil prices up about 3% this morning. As you can see, oil's at $80.48 a barrel. Mike, it looks like the backdrop has been about the war, but this morning we're looking at a huge sell-off in IBM on this warning because of a negative read-through from Accenture's outlook. Accenture lowered its consulting outlook, raising concerns that large enterprises are slowing discretionary IT spending. Many people have said, you want to know where the stock market goes? Follow the spending on AI. Your reaction to what we're hearing out of IBM this morning, Mike?
Well, so the cost of memory and servers and data centers and compute is skyrocketing. And the CEO of IBM says directly in his letter to investors that they are losing wallet share. And I'd imagine there's not an infinite IT budget, and the cost of memory has skyrocketed this year, right, or over the last 8 to 12 months, and that doesn't look like it's going to subside anytime soon. Okay, the adoption of AI and the spend for AI build out is going to be the largest infrastructure investment in the history of our country, and we have various log jams along the equation, and you have all sorts of different players fighting for the same memory, for the same chips, for the same land, for the same energy. Okay, so there are going to be speed bumps throughout this process, and I see what you have. I think what you have with IBM is kind of a temporary speed bump that's a result of some of these prices for different parts of that supply chain getting completely out of whack. Alex Karp said it last week, and I tend to agree with him. The people that are going to are making money right now are your chip makers and your software application layers. All right, and so that's going to shift dramatically as this whole sort of business cycle in this AI builds out. IBM is unfortunately a casualty this morning. It doesn't seem like this is a long-term problem, more of a temporary speed bump given the state of the markets right now. And to add a layer on top of that, like this war and the oil and the momentum players that are behind every single one of these stocks, you take the escalator up and you don't take the elevator down. It seems like you bungee bungee jump down with these stocks when they go in reverse. It is a tremendous amount of volatility in the market, which makes it harder for long-term shareholders to build large positions and stick with them. But that, to me, for an individual investor, if you're willing to stomach the volatility, gives you a tremendous amount of opportunity. A lot of stocks, like you look at a Micron, you look at a SanDisk, you look at the performance over the last 9 months. Okay, this doesn't happen in normal market cycles. We are in an anomaly right now. The opportunity is like nothing I've seen in my entire career. And to top that, most of Wall Street just simply has no idea how this is going to play out versus what the tech people are telling you. And to me, that represents, you know, certainly a source of volatility, but opportunity to the upside of the likes I've never seen before.
Yeah, I mean, look, we're looking at AI stocks this morning. They're higher across the board. Micron is up 3.5% right now, Mike. But no doubt the spending with regard to AI and the spending around AI is driving a lot of these moves, this expectation that the spending continues. And then this morning we get this warning from IBM on spending, and look what happens to that stock. It's basically what Brad Gerstner from Altimeter, who was with me earlier last week, said the market will follow spending. Watch this.
What set the markets ablaze earlier this year was Anthropic's revenue and OpenAI's revenue. If AI revenues are showing that we're earning a return on the $1.2 trillion of annual capex that we're now spending on AI, then markets are going higher. If we don't have those revenues, then people will start questioning whether we can afford this $1.2 trillion capex build out. What I'll tell you is the U.S. is ahead of China in AI. The revenues are showing up in May and June for the companies like Anthropic and OpenAI.
So what do you think, Mike?
Maria, I listened to Brad talk extensively last Friday. Anthropic's might hit $100 billion in annualized revenue by the end of this year, okay? And that could be as much as $500 billion by the end of next year. This is unprecedented growth. Anthropic is the fastest growing company in the history of the world. OpenAI is lagging, but not that far behind. The world is changing, all right? This is going to be, the largest infrastructure build out in the history of our country. The money's following, and anybody who's used artificial intelligence in their daily business, daily life, as do I, as I'm sure Kyle does, knows this is for real, all right? And it's how it's going to be monetized and how it's going to play out. I mean, that's very much up for debate. This is real. This is happening. And for investors, if you could stomach the volatility, this is unbelievable.
So it sounds like you're not unnerved by this warning from IBM this morning.
No, because specifically they're losing the wallet share. So their mainframes that don't really partake in the AI play are losing out to companies spending more money on the AI infrastructure build out.
Yeah, okay. And what about the major banks? Kyle, you're right. There are other storylines that we're following this morning. But this IBM warning came out literally just as we were going on the air to talk about the major banks. They reported earnings better than expected for the most part. JP Morgan Chase, Wells Fargo, and Bank of America all reported double beats last hour. We're standing by for Citigroup and Goldman Sachs. The stocks this morning are mixed. Kyle, would you put new money to work in any of these names right here? And what about tech?
I mean, I own most of the banks in my portfolio. I'm not sure if I'm putting new money to work. I think the banks are going to have a good year. Interest rates are higher. They're probably not going down anytime soon with the inflation we have. When I look at tech, I think a mirror image to what we're talking about in AI is NVIDIA 3-4 years ago when you and I were talking about it, Maria. But like, oh my God, the PE is so high. You know what happened? NVIDIA continued to execute, and their earnings went up, and their earnings went up, and their earnings went up. Even as the valuation, the market cap went up, NVIDIA became cheaper. I think you're going to see that in Anthropic and OpenAI once they go public too, because their earnings are going to continue to grow, just like Brad said. And I would not shy away from these names. I think these are the names of the future, whether it's the AI stocks, the chip stocks, or the AI verse, like Celestica or CDR Systems, which helps build the data centers, or the humanoid AI that's coming around the corner, autonomous vehicles. It's a whole ecosystem where you can make money.
All right, we will leave it there and keep watching all of that. Kyle, good to see you. Thank you so much for being here. Kyle Wool, Mike, you're with us all morning, and we're grateful. Stay with us. We'll be right back.